Hi, I'm Phil Anderson and welcome to my channel. I've been a property investor now for over 30 years and I've watched investors continue to make the same common investment mistakes. There's so many dirty tricks in the real estate industry and it's all caught up in a whole heap of sales hype. I want to cut through that sales hype and help investors avoid the common mistakes. I hope you enjoy the following content, but please remember to like and subscribe. G'day listeners and viewers across the country and welcome to another episode of Street Smart Property Investing, where I'm joined by a couple of my favourite, known and trusted property experts again. Welcome Mr. Ruddy.
Glad to be here.
Good on you, buddy. And Trent Durrington, the guardian, the bulldog of everything to do with sourcing and understanding, property investing with regards to locations, land developments, screening builders, a whole range of stuff. We're going to have some great insight today. And our topic today, as normal, we try to look behind the headlines, we try to push aside the sales hype, and we try to look at it through the eyes of property investors, the challenges they're having, the trends that we're seeing. And the big topic for today is this amazing rise that we are seeing in a trend towards remote investing. I've never seen a time when an investor feels so comfortable buying outside of their local area. Trent, have you seen it? You're obviously seeing it yourself because we're talking about it all the time, but let the listeners know what you're experiencing on the ground.
Phil, mate, it's on the ground. It's tough. It's tough. I've never been in the situation where constantly on the phone. I've got a long list of requests of estates, packages that investors are chasing. But the land developers are, in many cases, are putting up a ballot system for the owner-occupiers. First home buyers has been strong. It's cheaper to, have a mortgage than it is to rent. So you've got previous renters that are now buyers. You've got the shift out of the capitals into the regions. That's accelerated. So it's a real home owner-occupier market, and made it extremely tough for the investor to get in.
Yeah, so obviously when you think about remote investing and this trend and everyone being so excited by this big regional push and the hotspots that have been created in these key regional markets, the one thing that you're seeing firsthand is while this trend is picking up and people are feeling more comfortable buying outside of their local area, unfortunately, so are the families that are moving out of those areas and targeting these same locations and stripping the stock levels down.
That's it, mate. Look, the areas that we have targeted traditionally over the last decade have been predominantly high owner-occupier anyway. So it's not like call it a Chinese menu and you pluck a package off the shelf. It's always been a process to get a foothold in a owner-occupier estate area region. Yields had always been strong. Now it's just, those numbers, vacancy rates less than 1%, capital gain, land pricing within 12 to 18 months going up to 90 to 110,000 increases.
Yeah, it's crazy.
And that's on land that's only 230K, has now gone to over 300. There's many layers of what's happening in the market at the moment. And, it's good. It's great for us. It's great for our current investors. There's great opportunities, plenty of areas still to invest where there's still a big run. And the yields are fantastic. It's Gordy bangs on about it all the time about buying an investment property for the future, but you're getting those gains right now.
Yeah, you're doing something positive for your family today by buying a property, which is, no pain. Used to be, or everyone expected there to be some pain, but there's no pain. And we'll get to you in just a second, Gordy. Trent, just looking at, I guess, this land supply issue. You mentioned that these are the quality markets that typically there's, a high percentage of owner occupiers in them anyway. That's why we target them. That's why you've specialised a model to screen and target those particular properties. But there's just an abnormal amount of people trying to buy in those markets, buying family homes quite often sight unseen, chasing land while they're sitting in Melbourne or Sydney. They're chasing land in these locations, and it's just stripping out the supply levels.
Yeah, the levels are are basically none, you know, and if you are able to buy something new, call it off the plan, greenfield estate, places like in Melbourne, you know, registration would be 18 to 2 years out.
Yeah.
That's tough. That's even tough for the owner-occupier that's
Sure.
passionate about buying a block of land and building their house, and they've got to wait 18 months.
Sure.
But all regions, you know, it's daily that I'm on the phone and builders pulling their hair out.
Yeah.
You know, they want to build more houses. People want to build more houses, but they can't. You need land to build on.
Absolutely.
Yeah,
and I think if you're not experiencing that, if you think, oh, it's not that hard, you're obviously not in a hot spot. You're obviously somewhere that, you know, you would think maybe at some stage we'll get swept up in it because it's got to push out, but you never know. You know, the hot spots at the moment, the best markets at the moment, it is tight on the ground.
It is very tight, very tight. You know, and that's a number of reasons, affordability, jobs, lifestyle, all those, you know, lots of reasons. And for an investor to get in is the yields are just fantastic.
And the other thing, mate, is it's for a reason as well that, you know, land and local council and supply levels is all very much established around forecast for growth. You know, the council moves at a certain pace. Land developers don't, you know, overfinance themselves when there's no need to develop land. They develop it in harmony with what they know the population forecasts are and what council, you know, kind of is providing in the way of an infrastructure pipeline and sewerage and all of those other amenities that need to, you know, marry in with those land developments. And that forecast of growth and all of this thought that's gone into it has just been chucked out the window now because there's just a stampede of people flooding those markets.
It'll be an interesting 18 months to 2 years when you're talking about council planning, because the councils have a growth strategy for 20 to 30 years, typically 30 years out, and they revisit those every 5 years. And many of those corridors that we're in are coming up on that 5-year period where they do look at the numbers, look at the on the ground, what's actually happening, and they rewrite those growth strategies. And they'll it'll be interesting to see where they have to quickly shuffle and think about some rezonings.
They'd have to be panicking. They'd have to be panicking.
Have to. And, you know, obviously there's lots of factors in there of how they're going to get infrastructure to those new areas. Many of the areas we're in, you've got environmental problems. So it's not a matter of just rezoning an area and you can build houses there. You've got lots of environmental areas, so then an area becomes landlocked.
Highly protected or just not practical to develop, whatever that may be.
Yeah.
There's certainly, a lot of people would look at the map of Australia and think, oh, there's just this abundance of land. But as we know, particularly these coastal markets and many of the markets that, you know, certainly the favoured markets at the moment, it's just not that easy. Many of them are landlocked.
No, that's it, mate. That's it. And that just continues to put pressure.
Yeah, absolutely.
Pressure on growth and pressure on yields.
Yeah, no, absolutely. Let's cross over and have a quick talk to Gordy. So, Gordy, you know, obviously you must have seen a change of trend. I know for me the data suggests that 2018, 2019, it was growing. There was a focus and a kind of a surveys were telling us that about 40% of investors were becoming comfortable with, you know, investing in other states and outside of their market. And we've seen over that 18 months, and the latest surveys suggest that it's now up in the 90s in many of the surveys of people that are planning to buy hundreds and hundreds of kilometres from their local area. What are you seeing? You're dealing with investors all the time. What are you seeing?
Yeah. Just before I jump into that, Phil, for the benefit of the listeners and the viewers, obviously in our language we use remote a lot, but I think it's important that the listeners realise that we're not talking about being in remote areas. We're talking about, you know, investing remotely, like you've got a remote control. You can control that property from where you are. You know, we're not talking about going to the backwoods. We're talking
Never seen the remote control example of remote investing, but
well, that's what it is, remote control. I'll tell you, I've got clients who I spoke to you about them this morning that, you know, they bought a property 3 years ago. Well, they bought two. They bought a duplex. They bought one in the wife's name, one in the husband's name. Mm-hmm. They visited that property once. Mm-hmm. So they don't get up every day and go to work, They don't do that. You know, you love that analogy. You want your property to go to work for you from day one.
Yeah, sure.
And in 3 years, 3 years after they purchased, their bank manager rang them and said, we've just done a revaluation on your property, and we'd like you to know you've now got an extra $200,000 worth of equity. In other words, your property's gone up by $200,000 in 3 years. And what have they done for that? Nothing. They've sat at home, gone about their business, and created $200,000. So now they want to go and do something else. That's remote investing. That's sitting back and controlling it from wherever you are. You don't need... Gone are the days of needing to have your property, you know, around a corner where you go and check on the lawns or go and do the lawns yourself. I don't want to do that. I'm sure you don't want to do that. So that's, to me, that's remote investing, and people are realising that there's so many benefits to that, particularly if you invest, you know, interstate from where you are. Then, you know, there's land tax benefits. There's a whole range of benefits for doing it that way.
Sure.
You go in areas that are, you know, more affordable than where you live. So, yeah, the trend is growing, and yeah, it's just a great time.
Double the yields.
Oh,
yeah. Couple of big things I pick up there. It's right. It's a good thing to point out. Remote investing is certainly, you know, not about remote areas. That's one big thing, because many of these markets, when we talk about the markets that we're focused on, and we talk even about them as being regional cities, I think it's getting harder for people to understand what that means, because many of these markets, we're going to cross over and have a talk to one of the strongest examples of that, but many people would think about this particular market, and it's Redcliffe that we're going to have a talk to today. They could think about that as being, we talk about it as being another regional city almost, right? It's a satellite city outside of Brisbane, and it's an amazing growth area. Now, these regional growth, you know, kind of hubs, these are cities on the fringes of other cities, as well as their standalones. There's standalone lifestyle cities like the Port Macquaries, Coffs Harbours, the Sunshine Coast, and so forth. They're obviously examples as well. But the thing is, it isn't the little remote towns. It's not some town in the bush out the back of nowhere that we're taking a high-risk profile on. So it's a good one to point out. And also you talked a little bit, I guess, Gordy, about the fact that, you know, as an investor, it's designed to be a passive experience. You know, the ideal scenario is that you put your money to work for you rather than you working for your money.
I say, and I've said to you many times, that the goal for me with every one of my clients is that they have an absolutely great landlord experience. Now, in my mind, a great landlord experience is, man, I get an email on a property, and I know you don't even get that, it goes straight to your account, but I get an email with my statement from the property manager. I forward that to my accountant because I just like to look at it, but it shouldn't be any more than that, really. You just, because if you've got a good property manager, they'll pay your rates for you, they pay all the bills for you, and all you do is go, okay, that happened, and away it goes. That's, to me, that's the landlord experience. It's you know, you call it a lazy investor. I just call it a great experience. And
now it's even better than we've ever seen it before. I've been investing for 30 years. I've never seen a time now where when you take out a loan, the loan pays you money. You know what I mean? Like, and that's what's happening at the moment. Well-chosen investment properties. Most, you know, Australians don't realise how great the cash flow is, how many lifestyle benefits come hand in hand with that by buying well and using the positive cash flow to reduce mortgages on their family home and a whole range of other things. You're right. Buying today tends to mean that there's no pain attached to it. You're actually in a better position by buying today rather than not buying, and it's a different time in the market.
Great time in the market.
So regional investing and remote investing, guys, where's it all going to go? Like, what do you think their trend? Obviously, the biggest issue is going to be for those remote investors. It's just going to be, the challenge is going to be, whilst they're very comfortable, they're motivated, they're excited, the numbers are great, getting hold of stock's got to be a real issue.
Oh, certainly. You've got the many clients now that are on a waiting list to secure property in some of these owner-occupier estates. It's a real challenge. But,
well, mate, in the past, the old style of investing wouldn't have been that, as different as it is today, where, go back 10 years, people were buying probably predominantly existing housing. You know, they were going and buying a house that was already built, right?
Yeah.
Buying a house, a used house. But the government changed the depreciation benefits and the laws around negative gearing in 2018. So now most investors that have done the numbers and understand how to make the most of the buying opportunity are focused on brand new property. That's where the big cream in this whole negative gearing law is, but you just can't get the land to get the new property.
No, you can't. But let me just touch on that though. I still have conversations and get frustrated by some of the old mentality of the investors. And finally, after years, they've taken the step and they've made an investment, but they're still not structuring that investment correctly. You know, buying 30, 40-year-old houses, potentially in the wrong areas. Finance is not structured properly, and even though we're in the game, some people are very stubborn.
Well, mate, I know the one that...
I'm getting off topic.
No, I like it because one of the things that we've had this week was, people that have reached out for a bit of advice, people that have asked for some help and so forth. Then we've looked at what they're doing, and maybe they've even gone too far by buying a development site, a house they plan to do this, or a little set of, townhouses or development sites. And we've looked at it, and by looking at it, it just doesn't work. It's a whole bag of headaches, and because you've done it over and over for hundreds and hundreds of properties per year for years and years and years and years, you can look at a site and go, what the heck are they thinking? But they don't know.
Yeah, it's frustrating. They
think we'll buy it, we'll work it out, it can't be that much work. And by looking at it, that's not going to work.
Yeah, that's right. So look, it's a bit off topic, but for listeners and viewers, just take that opportunity to sit with a strategist like a Gordo and at least hear their side of the story and understand potentially what the additional benefits are of buying new over old, purchasing in some of these areas that we're talking about, understanding both sides,
Absolutely.
So the old investing is out.
Yeah, the big...
and you touched on the benefits that the government are trying to promote, for the investor to supply affordable housing, affordable rental accommodation. It's got to be structured right from the get-go.
It does. It's going to get, and the domino effects of, the builders' warranties, the no maintenance issues for years, the fact you attract better quality tenants, a whole range of things. It's
many properties, mate. We've got high rental guarantees. They're not needed.
Yeah,
but they're there.
Yeah,
5% rental guarantees. In some instances, 7% rental guarantees. They're there, and it's funny. Even during COVID, we've had no clients needing those rental guarantees.
Yeah.
But there's a lot of safety there. A lot of safety.
Yeah.
Your clients have made $200K, and they probably did a drive-by when they first purchased it. It's a set and forget.
Well, one of the big things I always say is just because you can doesn't mean you should, right? And you see this firsthand, Gordy. You help someone sit down and go, unemotionally, let's just let the numbers do the talking. That's usually what you would try to do for somebody to help them understand.
It's all about the numbers. It's not about being emotional. It's about, it is everything to do with the numbers. Let's see, we call it like a test drive. We've got software where we can, punch in the scenario. We can show them exactly what that outcome's going to be, what that income per week's going to be to them.
You narrow down an exact scenario that works for them. You help them understand what their price point should be, what their rental yield, exactly what the numbers should look like. Then you can talk to someone like a Trent to go, how do I match that up? What markets, what stock, what would really fit well in the market that's going to give me a great experience in the short term, great experience in the long term, make sure we're dealing with all the right people in between to make sure that you're getting a great quality product at the right price. It's certainly something that a lot of people can easily overestimate or underestimate how much drama they can get themselves in by grabbing hold of an existing property that they don't really know what the numbers look like. But we're going to have a talk to a few, obviously markets around Australia. Today's a really great example of that.
That Redcliffe Peninsula and Moreton Bay, the amount of infrastructure that council, the Moreton Bay Council's talking about and projecting and actually starting to act on is just amazing. you satellite city you mentioned, you're talking about increasing the business there within Moreton Bay from a current 17 billion to 40 billion in the next 18 to 20 years. Building rezoning, always talking about council and the rezoning, the West Caboolture section there, predicted 69,000 additional people living in that area. And you've got big international companies getting in there and investing now. So then you come back to the Redcliffe Peninsula. It's a peninsula, right? So you can't keep building there.
Nah.
So and it's very desirable. It's on the coast. It's some of the estates we've got. What I referred before, the land's gone up 100K in the last 12 months. A lot of positive stories.
Very exciting. Very exciting.
The investors that we've gotten in there over the last 12 months, it's fantastic, and it's only going to increase. 300 to 400 lots left in one of the estates there, right in Redcliffe, and once that's finished, the capital growth only can continue to grow.
Okay, guys, let's cross over. Now, we've been talking about these exciting pockets around Australia where this growth, this phenomenal push by investors and home owners, where these markets are just exploding at the moment. And one of the best examples in Australia is on that southern side of the Brisbane market around the Redcliffe area. And we're going to cross over live and have a talk to a principal in that market that is leading the way, and someone who was highly recommended to me right from the start that we must have on board with the investor-approved model. Let's cross over now and have a little talk to Denny, the principal up at the Redcliffe office for LJ Hooker. How are you, Denny?
Good, mate. How's yourself?
Great. Thanks for coming and having a chat to us today, buddy. We appreciate you. I know you're a busy man.
No problem. Thanks for having us.
Our pleasure, mate. Tell us a little bit about what's happening on the ground, buddy. How are you feeling about it? There's obviously a lot of energy you're starting to see with sales activity and so forth.
Sales activity is off the chart at the moment, and we're finding that buyers are getting frustrated because there's so many buyers with less and less stock every day. That prices have definitely been driven by competition, and there's a lot of people missing out.
Are you starting to, does it feel like you've got to go to auction? How's it feeling on the ground? What's the best way to handle that activity, I guess?
Yeah, auction clearance rates are really good. Pricing, we haven't been doing a lot of pricing. It's been putting it on the market with no price. And then if we don't do auction, it's no price, and then competition dictates where it ends up. 99% of the time, it's well and truly above sellers' expectations at the moment, and there's a lot of people pleasantly surprised.
Yeah, it's interesting. We're hearing that a bit, buddy, in these markets, and you're definitely in one of the, the great, regional growth markets. And a lot of people, and I say regional growth markets, we just mentioned this a second ago. People think of, I guess, these big cities, and Brisbane's obviously, a favourite for growth over the coming years. But Southeast Queensland has got not just, the city centre of Brisbane, there's these other satellite cities all around it, and you are definitely one of those satellite cities, that region, of Moreton Bay. I don't even know how to, do justice to what growth it's expecting there, but your area is certainly now, all the local facilities, you've got a direct train line back into the city. So much is happening in that area now that's, you've really come to age, I guess, buddy. It's a real little city centre almost.
Yeah, well, this city's surrounded by water too, so that's been one of the preferences for a lot of buyers for the coastal aspect. So, but the city's pretty much going vertical now. There's a lot of unit developments and some new housing estates happening. But yeah, Redcliffe's very busy. Just
about out of land, right? Just about out of land. That whole area just makes that landlocked.
We are. There's a lot of builders doing rip downs and building new. So there's a lot of renewal in the suburb at the moment. But some of the prices they're getting now over the $1 million marks for a new build that's not even near the water. So wow. it has gone crazy.
Well, the vacant, when I say vacant, the new greenfield land being in Newport there, Danny, I've seen that price move 100K for the equivalent block within a bit over 12 months.
Yeah, crazy. It's one of my favourite estates too. It's a beautiful looking estate. I know you know it well, Danny. But yeah, that's the problem we're seeing. Investors really struggle to get into that market at the moment.
Well, they have to pay. That's the thing. Price is driving, and I've got one guy that does house and land. He just ripped 4 down and put them up, and he was asking mil 50 for them, and the last 2 he got them 1.1. And
wow.
Next door couldn't sell a year ago for 800, so it's crazy.
Yeah, it's an interesting market. And on the ground, is that kind of also resulting in the fact that there's becoming a shortage of rental properties as well, Danny?
There's a rental market's hard to get into if you're a tenant, that's for sure. But that's really good for our vacancy rates and for our investors. They're all getting really good in returns, and returns are increasing too. The rental market's going up as well.
Yeah. So what would you say? You got any feel for what your vacancy rate may be? Have you got many available properties to rent?
No, there's never any more than 3 or 4 on the list, and they're gone before the tenants move out. So the only times we see something that's vacant is while we wait for settlement, and it's an investor that's purchased it, or there's a change out let's tidy up or something like that. But they're not empty long.
So you've got a waiting list of people ready to go, and that's what we're hearing. Like I said, in these markets, it's certainly almost a bit of a concern as to how low the supply of rental properties are for the tenants. There's a real crisis situation emerging for tenants that just simply can't find a property.
Yeah, that's right. There is, and we've sold property where the tenant has to move out because the homeowner wants to move in, and we're finding it hard to get them out because they can't find anything to rent.
Crazy. And so, obviously you're another great example of property market is moving from, two perspectives. The prices are getting pushed up and rents are getting pushed up at exactly the same time. Rarely you see that situation, Denny.
Yeah, that's right. And that's not often you see that. It's that's right. Not often at all, and that's what we're seeing at the moment.
Yeah,
I can't see an end to it.
Mate, tell me a little bit about, I know your property management team do a great job there in that local market. Are you starting to see, I guess as this price changes and as we see, the rents have got to go up to a point where I guess a lot of people that would traditionally be able to rent in your community are going to have to start getting pushed out of that community, because it is that waterside suburb. It makes sense that it's going to become a very affluent community, really.
It's going to be one of those suburbs that the regenification.
Yeah.
Have I got that right today?
Regenification, yeah.
I mean, Redcliffe is such a pretty place. Obviously, you've got people moving there now, Danny, that potentially maybe haven't driven, in different suburbs of Brisbane, haven't driven out there or haven't realised how pretty it is and the feel the community has. So it'll be unfortunate for obviously some of the renters within Redcliffe, but you've already mentioned the knockdown rebuilds. It's happening. There'll be
absolutely
the posh cafes opening, all the restaurants that'll follow, and they're on an island, as Danny said, so you've got the ability there once there's nowhere else to go, so it's just going to drive pricing.
That's right. Yeah, 100%. And the closer you are to the water, the higher it is.
Yeah. And mate, I know you've got such a strong foothold in that market, all the other, LJ Hooker corporate team and many of the principals I talk to describe, your office there as being one of the stronger offices, and you're a great operator in that market. How far are you able to service outside of Redcliffe now? You've been pushed to do that? Are you starting to see, are you starting to handle more property outside of that suburb, or are you just, full-time in that market?
Oh, we go right out to the Reception Bay, so we cover pretty much the bay and all of the peninsula. So, and, I had an office use back in the bay, so there's a lot of our rentals that's still out there. But even that market's changing a lot now. I'm seeing, I saw one the other day. I kind of told a seller, I thought the property was worth about early 4s. We had a 470 come in and a 480. I was kind of lucky I was sitting down when I saw it. And then just before we got in to sign a contract under competition, we've got someone to offer 505. Wow. So, that's $100,000 nearly more than what that place was worth six months ago.
Yeah, wow.
Yeah. It's incredible.
Crazy.
It's what's happening I've never seen in 20 years.
Yes, mate, I think it's just really starting too, which is the crazier part of it. I think we've got this swell, and what I'm hearing about your particular, market area, I think what we're facing is, a run that's going to last for years to come. What were you just saying about this, huge investment by the government?
You've got Moreton Bay that's obviously a big growth corridor. Danny's sort of part of the Moreton Bay Council, but sort of on the southern end of it. But that stretch between Brisbane and Sunshine Coast, huge investment by the government there to promote jobs. They're talking,
it's massive.
Taking the economy, adding another 23 billion within the next 20 years. And it's a desirable place. If you're living in the heart of Moreton Bay, you're less than an hour to Brisbane, less than an hour to the sunny coast.
Yeah, it's pretty special, right?
Very special. And there's also talk about the high-speed rail, connectivity that way, a whole range of different public and government infrastructure to come.
It's a real growth hub, isn't it? It's like that real designated area, that designated growth corridor, I guess. You know.
Hey, Danny, I'd be curious to know if there's any sort of profile of those type of buyers that are coming in. They're just other Brisbane people, or are you seeing any interstate buyers?
A lot of interstate people, a lot of people moving here, but a lot of locals. I feel first home buyers are starting to get pushed out of that market. That's, even though money's cheap, they've kind of got to go out further for new builds now with government incentives rather than
right.
the prices that we're getting. The prices that we're getting to, it's kind of hurt. It's starting to hurt them, and I see 6 months from there we'll see less of them and more of the interstate second-time homeowners and buyers like that. The Deception Bay suburb, I see a lot of first-home buyers because that's still around the high threes, early fours, but that's the same suburb that I just got that 500 on, so I think that's going to affect those buyers.
Changing quickly. Gosh, it's amazing how we look at some of those areas that are the B grade or C grade suburbs around A grade suburbs, and very quickly that ripple just rolls out, and what was once very affordable all of a sudden becomes, the new norm is a whole nother story, right?
That's right.
Yeah. Hey, Danny, look, thanks so much for giving us an update, mate. We're going to try to do this from time to time. We expect you to be one of the, areas that we'll need to keep an eye on, for the next few years. So we appreciate you letting us know what goes on the ground. We appreciate that very much.
No worries, guys.
And I know that, I've got to say that I really do appreciate the fact that you share our passion for protecting investors, and I'm looking forward to giving, your database a quarterly update on what's going on across the national property market. We're all looking forward to helping investors understand what is a pretty crazy and phenomenal time, but a tough time as property investors. It's mate, the challenges are out there with just getting access to the stock. So it could be a bit tricky for investors to navigate. So thanks for sharing our passion in that, mate, and thanks for being on board with the Investor Approved model. We look forward to talking to you again real soon, buddy.
All right, guys.
Good on you, Danny.
Good one.
Good on you, mate.
Cheers,
Thanks,
mate.
Danny.
Hey, so it's always great to catch up with Danny. It's nice to have a cross and understand what he's seeing at that local level, because I'm hearing some great stuff about that market. It's a fantastic pocket, that northern side.
Well, I mean, there's a few takeouts from that conversation, interstate migration, also locals, and then potentially pushing the first home buyers out, regentrification. It's happening, and how many times are we hearing it in multiple markets? Multiple markets where it's rapidly becoming landlocked. There's no land available. Price points are getting pushed out. Rents are getting pushed up. Ripples flowing out into those secondary markets that still feed off those core, I guess, city centres. Yeah, it's a pretty exciting time.
Very exciting time. What I've noticed with every agent we're talking to on the ground for home buyers, owner occupiers, is the number of people that are making offers on properties. And I can only imagine that for many of them, they don't even get a look in because they're not ready. They're not buyer ready. They're gone are the days that you can go in and go, okay, well, give me a finance clause for X amount of days. The vendor doesn't need to do that anymore. They don't need to give you 21, 30, 45 days. And that's going to be the same for our investors. We need to be as prepared as an owner going into buy an owner-occupied property.
Yeah.
There's no point, Trent, spending, days and weeks and months putting stuff together and, an investor come in and say, okay, well, I'm interested. Can you give me a few months to get sorted? That's not going to happen.
No, it's not going to happen.
My takeaway is, from an investor's point of view, is let's get ourselves ready. Let's do the homework first. We spoke about it before we spoke to Danny, is that whilst we've got to get the numbers right, the very first thing an investor needs to do is understand exactly where they are today, know what their ability is. You say just because you can doesn't mean you should. So they might have a borrowing capacity up here. Doesn't mean they've got to borrow that, but they need to know what they can do and then work out what they should do.
And imagine trying to do it on your own at the moment.
You couldn't do it on
Gosh,
your own.
we see this big swell, this remote investing trend, 90+% of investors wanting to buy in these other states. All those barriers are down. They're very comfortable at the idea of buying, hundreds of kilometres from where they live, and in other states in many cases. Like you said earlier, Gordy, they can get benefits like, new land tax thresholds in each of the states and a whole range of... I think your portfolio is much safer when you've got a range of, cycles. It's like having an orchard of fruit trees and the fruit's bearing at all different times. You haven't just got one fruit-bearing season because you've got everything in the same market. You can always go back and say, oh, there's some equity growth over here. I'll use that to buy another fruit tree in another market over there. I'm a big fan. I'm a big fan of remote investing, of having a national portfolio. I think it's a much safer way to build. But my gosh, trying to do it at the moment in these markets, it's just so damn hard, to do it on your own. Those days are gone,
Yeah, well, mate, I'm finding it tough, and I'm leaning on those relationships, and they've been lengthy, and I've put a few runs on the boards over the years, so I've gained that trust. But it's tough going for me, and I've got a waiting list of investors, to want to get into these properties, and we'll get it for them.
Mate, let's put that in perspective. Before you go there, like, we're talking about the builders that you're dealing with that are some of the most, recognised builders in Australia that typically would be able to walk in and call the shots. Next stage, they'd be able to go, yeah, I'll take a dozen or I'll take 20. Now we're talking to those same, very, strong builders that have got allocations of like 4.
Oh, it's less
right?
than that, mate. It's ones and twos.
Wow. And then you get... obviously for each of those lots of land, there could be 10, 20 people that are on the list wanting to get in. And it's only through relationships like yours that we jump the queue and get in and say, when they come up, we want first option on it. Yeah. How would most investors be able to do it on their own? If you can buy, it comes back to that same thing I said earlier. If you can buy at the moment, you're really not buying in the hot spots. You're buying somewhere like might be a C-grade location.
Yeah, and then you're not dealing with the builders that understand the investor and the security that they need. As an investor, fixed price contracts, warranties, guaranteed build times, plus. Mm-hmm. You're potentially dealing with those builders that can't provide that.
Or you're dealing with a sales team that's really just doing a whole suburb full of investment stock, which is not what you want to be doing either, right?
That's right.
So it's pretty interesting, and it's certainly for me, like I said, exciting, but also you can see where the problems are certainly there for the investors today. Last thoughts, Mr. Ruddy?
Just recapping is, get the team behind you, get yourself ready, and make it all about the numbers. The numbers, like we spoke about that earlier, the numbers have to work.
Yeah. Last thoughts?
Mate, get active.
Yeah.
Get off your hands.
Yeah. Or you're going to get caught on the sideline, right?
Yeah. I give myself a pat in the back during these times, and numerous times on the basis that making clients hundreds of thousands of dollars, and advising at times this is going to be a good spot to invest. Never questioning myself, but also trying to sell the story and the infrastructure and the population growth and all those sorts of things in areas, and investors trusting where we've said the next little run's going to be, and seeing them now make hundreds of thousands of dollars. It makes me feel good.
Well, mate, it's great, and it is a credit to you because it really does come down to really great research, a really great recipe that you've developed over the years, the fact that you take the time to understand the recipe from where it starts right through to how do you put it into place and how we bring it all together to be, decades of experience, lots of hard lessons learnt that we now know how to protect investors. And as a little formula, you put them right into those growth corridors in the right properties, and it certainly, I can see why you get a buzz out of seeing them do great, and that's what we're here for. It's protecting them, but we're all getting, obviously getting a great result for them at the same time.
Yeah, no, it's exciting.
Good on you, mate. Yeah. All right, well, thanks for joining me, boys.
Yeah, thank you.
We'll talk again next week.
Good seeing you, Gordo.
See you, Trent.
It's been another episode of Street Smart Property Investing. Talk soon, guys.
Thanks for watching, guys. Don't forget to subscribe, and also feel free to leave me a question. I look forward to helping as many property investors as possible. Take care, and we'll talk soon.